How are you guys doing out there? This is Martise Brumfield with Martise Brumfield Real Estate, and I'm here with the famous, infamous Richmond #1 mortgage banker. So honored.
Oh, stop it.
So today, Richmond and I are going to give you guys some information about where we are with the mortgage industry. As you know, right now, you guys have probably been seeing interest rates, go up, come down, kind of been going up and down a little bit. And so Richmond here is going to provide you with some information that may be beneficial for you who are current homeowners, who are thinking about maybe doing a refi. And then, of course, for those of you who are not necessarily homeowners just yet, and thinking about making a purchase in the near future. So, Richmond, first starting off, can you kind of explain to us where we are right now in our mortgage industry, and what does that look like, for us the next couple of months out? But first, where are we right now with interest rates?
Interest rate right now is really good. I started 15 years ago, 14 years ago.
Okay.
Interest rates do like 8%, 9%. Now, 30-year fixed loans like at 3%.
Oh, nice.
Yeah, 3%, 3.1. Like on the FHA, you look like a 2.75.
Oh, nice.
It's phenomenal.
It is.
Back home in Africa, where I'm from, interest rate is like 25%.
Okay.
So I'm excited.
Excited.
Yeah,
All right.
excited.
All right. So I know that right now, like I said, our interest rates have been, up and down, which is of course synonymous with the mortgage industry in general. But because of the, the velocity of the coronavirus right now and where we are, we've been seeing things that have not necessarily been consistent on a day-to-day basis. I know normally your industry, or I should say our industry, we see at least some form of consistency maybe for about, a week or two, maybe in a month or two, where their interest rates have been consistent. But this is not like anything that we've seen before.
Correct.
So what can we, one, attribute to that, and then two, where do you see us being the next couple of months out?
Well, to be honest with you, one example is like banks are telling people to do, the government telling people to do forbearance.
Okay.
If you're doing forbearance loan right now, a lot of banks are not even refinancing your house because you're doing forbearance. They don't want to touch it. A lot of investors, and that's why it's driving the interest rate to go up, because a lot of investors don't like that forbearance. The government might tell you that's good, but a lot of investors don't want to do that.
Okay.
As far as the tightening the guidelines, you used to have a FICO score of 580 months ago. Now with a down payment assistance, you need to have a 640 FICO score.
Okay.
Then you got somebody like Chase, you might need to have a 700 FICO score. The debt to income ratio, let's just say it used to be like 49%. Some banks are tightening up to 43%. Some banks are doing it for 40%.
So they're changing a lot of the guidelines.
And they change it like sometime every day now.
Okay.
Like let's have a meeting, something change again. That's how crazy industry becoming now.
Wow. Okay. So just to clarify, so what used to be okay was a 580 FICO score.
Yes.
And now they've increased that number to
640.
To 640.
And some banks are 680.
And some banks are 680.
Yes.
So okay. I know that Chase is one direct lender in particular that has made one of their requirements a 700. Can you speak to us on that a little bit?
Correct. Chase, and this is basically, people hear a lot of things, and even though that's my competition, but I like to be honest. When it comes to 700 FICO score, Chase is talking about people with jumbo loan.
Okay.
Jumbo loan is anything that's over 765 and above.
Okay.
It's considered jumbo. It can be 800, 900, a million. The loan amount can't go below 765. If you go over there, it's considered jumbo.
Okay.
They require you to have a 700 FICO score.
Okay.
That's what they was talking about.
That's what.
And on top of that, they're doing that because they wanted to basically refinance their in-house preferred lender, customers before the outsiders.
Okay.
So they changed a lot of things on purpose, just to delay.
Okay, just to delay.
Yeah, but the industry's still booming.
It is. I mean, we see, closings taking place every single day with people taking advantage of, the interest rate, particularly when they were like 2% just in March.
March. Yeah.
They were around 2%. And then I seen something where they dropped even lower than 2.
Maybe on a 10-year fix.
Okay.
Yeah, on a 10-year fix.
On a 10-year fix.
Yes.
Okay.
But not a 30-year fix.
But not on a 30-year. So what can we expect to see from the mortgage industry? What do you project? What do you think will happen over these next couple of months? I know we have to get out of this space of where we are right now, but what do you foresee taking place with the mortgage industry, particularly as it relates to people purchasing more homes, maybe either as first-time home buyers or possibly just purchasing investment properties?
This is the part I always preach to people: the rich get richer.
Yeah.
Okay.
Yeah.
I personally think that as long as almost 27 million people don't have a job right now, the industry's still going to tighten up their guidelines because you have 27 million people that are not working right now. So if I was you, if you are blessed to have a job, that means you have a job and you're still making good income, I would buy it. It's like that candy now later. You got to buy it now, you got to buy it later.
That's a good point.
You know what I'm
That's
saying?
a good point.
So if you rent it from somebody else, why you rent it from somebody else? People trying to find the perfect time to buy.
Yes.
It's like going to Vegas and say, I'm going to have a perfect time to gamble or whatever, or play or whatever. You just can't.
You can't do
You
it.
just have to do what you got to do and keep it moving.
Right.
Why interest rates low? I'd rather pay that than pay a landlord money to make them richer.
Right.
I refuse to do that.
Okay.
But the industry, people think that, oh, it's going to drop 40%,
Yeah.
30%. I haven't seen that.
Yeah.
Is it going to happen? I doubt it.
Right.
But people still buying.
Yeah.
And the people that's buying are the people that have a job.
Right.
So people that have a job right now, they're buying it for cheaper. So if I was you, I'm talking to you out there, get in touch with Mr. Patrice. If you have a job, buy it right now. Good deal for you.
Yeah.
That's
yeah.
the best way I can tell people.
Yeah.
You know,
Yes.
and
It's funny that you would say that because me and you actually share the very same philosophy, and that is leaving a legacy for your family. And I've been on this campaign for quite some time now, sharing just information about, you know, things that you can do differently to empower yourself, but not only yourself, but your family. You know, leave something for your kids. You know, I just had the attorney in here, you know, a few minutes ago, sharing, you know, how to protect their estate and their assets. And so this is no different. This also is part of the conversation that we have to have. And so leave that legacy, you know, make the purchase, because tomorrow we know is not promised, but at the same time we can be prepared, we can plan ahead, we can do everything we need to do so that way our loved ones are taken care of.
it's so funny you saying that. And I didn't know you back then. Right after college, my friends was going to buy Mercedes, the nice material stuff. My mom put me down like, no, you're not gonna do that. I'm gonna make you buy a house. She did. I literally signed loan docs, basically in tears, because I didn't want to do it. Because I wanted to kick on my friends and buy the nice car, the sports car, all that kind of stuff. The appreciate is gone. I ended up buying that one house in Cerritos for like $160,000.
Wow.
2002, right? And I refinance now on 21 properties now.
Nice.
So I always tell people, I have 4 kids. I leave legacy for them.
Absolutely.
So their kids and kids and kids don't have to struggle.
Absolutely.
And we get mad. I'm not trying to please, and I haven't talked to you about this yet.
Right.
I'm not trying to bring race involved.
Right.
I feel like we 10 generation behind.
Absolutely.
I work with a lot of Jewish people in Santa Monica, and I see how they do it. They never sell their property. They keep buying and buying and buying. They own 95% of Santa Monica.
Absolutely.
Anybody can own anything if you want, but it's up to you.
Yes.
It's called discipline.
It is.
You know.
It is.
Don't get mad at me,
No. Go ahead. It's discipline.
Yeah.
So my next question then to you becomes, and this is a question maybe some people know, but maybe some people don't.
Yeah.
Do you consider the home that people currently own an asset or a liability?
It's an asset to me. To me.
Okay.
Because what I did is like.
And the reason why I ask that is because there are some people who are in the financial, they give financial advice,
Yeah.
you know, financial planning, and one of their schools of thought is your home that you currently live in is a liability until you utilize that equity in that home
Correct.
to make purchases for other properties.
That's true.
Yeah.
That's perfect.
Okay.
That's exactly what I apologize. That's exactly what I'm about to say, because you have old school generation
Yes.
that used to basically say that I'm not going to refinance my house, I'm not going to take money out. The money just sitting there collecting dust.
It
That's
is.
how I look at it.
Yeah.
So to me, you can have all this, but you don't have any properties to show for. It's a waste.
It is a waste.
So what I do is like this, like my client I just told you about, this younger man, 65 years old, bought a triplex for $170,000 in 1998.
Okay.
Now the same triplex is worth 1.2. I just refinanced to give him $300,000 cash out to buy more properties. And he doesn't even have kids. You know, so I always tell people that it's good to keep on investing because what are you rushing to pay off your house for? You probably not gonna have no write-off after that anyway, and that's why the IRS is gonna be happy because you don't have no deduction.
Yeah.
So you have to keep on investing, let the money work for you. 60% of people when they retire today, Matrice, they're gonna live on your Social Security.
Which is, I don't know if you recently heard, they said that's getting ready to run out.
Well, that's what I'm talking about.
Yeah.
People, the person I know the most get about $2,500 Social Security. What can you do in Social Security? Of course, you're older, you don't have a lot of, stuff that you gotta buy.
Right.
But not everybody can live off $2,500 a month
No, you can't.
in Social Security.
Yeah.
So you gotta keep on buying so your real estate can build worth for you.
Right.
And you can collect rent so you can get some cash flow every month.
Now, what do you say to the person who currently owns a home and they're sitting on that equity? I mean, because right now, and this is according to Bloomberg, I did a stats on it. According to Bloomberg, individuals who have a mortgage on their property have at least $177,000 of equity in their property.
Wow.
So, what do you say to someone who has equity that may be on the fence or maybe has not necessarily made up their mind to utilize that equity and they're just simply going to, as they say, let it ride and not do anything with it?
Wow. That's a phenomenal question.
Yeah.
You becoming great at this. You talking to them. Let me tell you something. If you have equity in your house, you need to refinance. I mean ASAP. But one thing though, don't refinance and don't buy.
Right.
Because when you refinance and spend the money, it's a waste. I'm not going to give you that advice. It's better to refinance than buy. That's why we got to get in touch with you,
Yeah.
us, whoever. But you got to refinance and buy another property.
Right.
It don't make no sense to refinance and let the money sit there collecting dust again.
Right.
You have to keep on investing.
And have changed behavior because you want to purchase things that grow in value as opposed to depreciate in value.
Correct. Correct.
I mean, of course, if you need a new car, that's fine. But in the same token, let's not utilize that equity that's in that house for non-smart moves, if that makes sense.
That definitely makes sense.
Yeah.
That's the best thing you have said so far. Like, you got to keep investing. Me personally, like I said,
Right.
another thing, this is off the subject. You have one of my clients bought a house. She keep on investing in 401k. So he was putting like maybe 5%. The company was matching. What got Kaiser? Sure got. In 10 years, that 401k have about $190,000, almost $200,000. But guess what?
Okay.
He bought a house 5 years ago. In 5 years, his appreciation in real estate is about $600,000.
Wow.
So you bought 401k that a lot of people always forget 401k.
Yes.
You don't see the stock market going down. Nobody getting mad though. It's gonna go back up.
Yeah.
But it's going down. Go up and down, but real estate always build equity faster than even 401k.
It does.
And I tell people that all the time. But you definitely right what you just said.
Yeah, I mean, and even when we see the difference between what's taking place right now with the health crisis that we're in with COVID-19, the projections are still showing that our economy is going to recover within the next
3 years.
3 years.
Correct.
Unlike the Great Recession, you guys, and the Great Depression that took 9 years and 12 years respectively to recover, we're only expected to drop down and recover back in 3 years. That's unheard of.
Speaking of that, I'm so glad you're saying that as far as this virus that happened. Nobody was prepared for this.
No.
No one. But I hate to say that I was. And the reason I'm saying I was because I had more than 6 months reserve in the bank account.
Which is a
You have-
blessing, yeah.
I was reading that you got 40% of people in America don't have more than $600, $700 in their bank account.
That's That's true. Mm-hmm.
It's not a shame, but people got struggle.
Mm-hmm.
So you always gotta, even though every day is not promised,
Mm-hmm.
but you gotta live like, what about if God bless us to be alive tomorrow, are you gonna be able to survive?
Mm-hmm.
And then even U.S., the world wasn't even prepared for this.
Mm-hmm.
You know what I'm saying? So you always gotta start preparing yourself, buying real estate. So if something can happen, you can always refinance and get some cash out.
Right.
Stress kill. You don't need to be stressed out.
You don't. And I liken that to, you know, now that we know what we now know, after all of this, a community, as a people in general, going to do differently now that, you know, we've come through, if you will, if I can say that, and be so bold. What are we going to do now differently as a people, differently than we did previously, you know, before COVID and all of that, you know?
Well, what I think, one, we said having a second job was an option, but now you have to have a second job.
Now you have to have. Absolutely.
We all know you gotta live your life.
Yeah.
That's more promise.
Mm-hmm.
But at the same time, what about if you are alive but you can't even pay your bills? We don't want you to be homeless either.
Absolutely.
You just gotta be smart and invest your money. Being smart about it.
Right.
Or getting a job that while you still young, while you still able to be walk, you know, breathe, you gotta do what you gotta do.
Yeah.
Because the sad part is like your kids actually, Mom, Dad, we don't have no money. I mean, we don't have no food in the grocery, or we don't have this, or we about to get evicted.
Mm-hmm.
That's more sad.
Yeah.
You know what I'm saying? I know every parents love their kids or their
Right.
siblings or their husband or their wives, but you gotta do what you gotta do.
Mm-hmm.
Especially now that we know what we know now.
Mm-hmm.
You gotta be 10 times prepared. The president wasn't even prepared.
Mm-hmm.
The government wasn't prepared.
No, they weren't.
I mean,
Yeah.
that's real.
And unfortunately, because of where we are right now and with people being at home and jobs being lost through layoffs and things like that, you know, in meetings and whatnot, we're starting to hear that we're getting ready to experience a totally different market. With when I say different, and you probably have heard this already, and I'm just going to speak it, is the foreclosure market that we're going to see soon. So, you know, that's the other thing.
That's another thing. You got people that not now, 4 or 5 months from now, that's still losing their job. I'm telling you this, the unemployment money is not gonna be that much. That people that make $100,000 a year, now they get unemployment was like $1,000 a week or $800 a week. It's not enough.
It's not enough.
So some people are gonna force to sell their house.
Yeah.
That is my prediction.
Yeah.
You got people in Vegas. I'm giving you an example of Vegas. 85% of people that live in Vegas work in the casino.
Mm-hmm.
Now, if the casino is shut down, how they gonna survive?
Yeah.
And
That's
you can't,
a lot of people that are not working, that are trying to make ends meet. Yeah.
Correct.
Yeah.
So you definitely giving information for free
Mm-hmm.
that people didn't take notice and take it seriously because
Mm-hmm.
you are home. We talking about you. That you gotta come up with a different
Strategy.
PowerPoint. Yeah.
Mm-hmm. You gotta have a different plan, a different strategy. As my people used to say, don't be caught with your pants down.
Don't. As much as I want to help as many people, sometimes I can't because banks are not going to own your house if you don't have no job.
Absolutely.
I'm just keeping it real with you.
Yeah.
No job is going to do that. I don't care if it's a hard money loan. Hard money loan people even being tight on their own guidelines right
Absolutely.
now. And they give like 7, 8, 9% interest.
Mm-hmm.
So, you know, pray that everybody still have their job. And if you don't, trust me, you'll be all right. Pretty soon you'll get a job. I'm praying that you will. But the people that have a job right now, you gotta keep buying. Refinance, buy. Refinance, buy.
Absolutely. And, you know, if I can be so bold to say this, don't buy into all of the hype with, you know, it's going to be doom and gloom. You know what I mean? You know, maintain a certain level of positivity in your life. You know, if you're a spiritual person, continue to pray, you know, keep the faith or whatever, because this too shall pass. We know, you know, we've always bounced back as an economy, as a country, but most importantly, we want to get you guys to see that there is light at the end of the tunnel, and use this time, you know, to do your homework, do your research, but most importantly, use this opportunity to prepare yourself for your future and leave that legacy. You know, that's what Richmond is that's what Richmond is, you know, here for, and that's what I'm here for. So, you know, thank you, Richmond, for stopping by. We appreciate it. We know you have a lot of people that want to get your contact information. So what's the best way for them to get your contact information for those who are watching.
Well, my name is Richmond, and I appreciate you.
Yeah.
Thank you so much.
No
It's,
worries.
humble. Really appreciate for even taking the time to talk to me. I'm
No
always
worries.
humble.
Yeah.
My phone number is 562-239-7952, and I'm always picking up the phone. I don't care what question you have. You don't have to do business with me, but I just want to be able to help, or we both want to be able to help. And the last thing I want to say is this: I'm hearing so much about people doing that forbearance.
Yeah.
Okay. Unless you really don't have a job, you need it, fine.
Yeah.
But if you do have a job, don't get it twisted. This is how the banks make more money. They charge you more interest on the back end.
Yes.
So you might think that you're getting 2 months off, which is fine. It might work for you. But when you're about to refinance or buy a house, they're going to go, oh, you just did forbearance. That means that you have to say that you wasn't making that much money. How you going to buy the next house? How you going to buy the investment property? They're going to look out at that. I'm just being honest with you. This is the political stuff behind the scene that you guys don't know.
Yeah.
Like, they're going to see that, oh, he just did a forbearance. Well, how are you able to do that? You just told the bank that you don't have that much money, or you're not making that much money.
Yeah.
You might try to want to get by, but be careful, because nobody's going to tell you like we are. We just keeping it real. You might not like it, but we just got to keep it real.
And sometimes it's a hard pill to swallow, but you just got to give it to them.
Correct.
Yeah.
Correct.
You're right.
Yeah.
You're absolutely right.
So I really appreciate what you're doing for this. In a way, it's a free service, but I hope that they call you, use you. Like I said, you don't have to use me, but I just want to help.
Yeah, absolutely. That's what we're here for. We're here to serve, if nothing else, is to help the next person. Yeah. Thank you guys so much for tuning in. We hope the information that we did share with you today was something that you can use, but most importantly, that you can implement immediately into your estate planning and your portfolio, your real estate portfolio. We trust and pray that everything works out for each and every one of you, but most importantly, we look forward to hearing from you guys soon and to get something going for you in the near future.
Can't wait. I'm excited. I'm honored.
Yeah.
Thank you.
Be sure to leave your comments, questions. Be sure to like, share, as well as subscribe. We are on 3 different platforms. I said 3, I held up 4. LinkedIn, Instagram, Facebook, as well as YouTube. So be sure to like, subscribe, and follow us. Thank you so much, you guys. And until next time, we'll talk to you soon. Take care.
All right now.
Bye.
Bye-bye.